Welcome, everyone. If you like, please feel free to move up. I know we're at the end of the second day of the conference, so we want to have this discussion as a panel. But in the last part of it, we really want to engage. So if anyone had any questions, bear it in mind, and then please try to contribute. I actually would like to bring on the panelists right away so we can get started. I'll do a brief introduction about myself first. I'm from Nordic Blockchain Association. We've existed for 10 years now. We're builders within the industry that created a association, a platform. We got hundreds plus partners. We do meetups, we do conferences, we do a lot of regulatory work. And the reason why I, as a representative, would be relevant today is prior to that, I worked as a venture capital within blockchain. We did 50 plus investment. Our investment strategy was up the stack, so we invested in protocols, middlewares. Some of the work that we're doing in NBA as well is surveys and mapping. So we have been mapping consumer users since 18, so adoption. And as well, we have been mapping companies building within it. And what we talked about leading up to this was, it was important for us, what we want to talk about is the component of the infrastructure. So I will make the introduction on that topic, very high level, and then they will give their thoughts on it and why you introduce yourself at the same time. So when we are talking about infrastructure, one thing is structured product, it's capital flowing into ETFs, but the way that we're seeing it is there's this component needed for this to happen. You need, of course, protocols, you need exchanges, you need wallets, you need KYC, AML. There's a lot of components that needs before capital can flow in, and that's kind of like how we're gonna talk about Web3 infrastructure today. But let me hand it over for you.
Yeah. Can you hear me? Yeah. Hello, everyone. My name is Daniel Jonsson. I am the CEO and co-founder of mgmt Digital Infrastructure Fund and mgmt Capital Partners. I live very much on the physical side of digital infrastructure. I've been a Bitcoin miner since 2017, doing that at scale since 2019. Along the way, we also have a liquid trading hedge fund in Iceland, where we trade these tokens of ours, and most recently we've launched the Digital Infrastructure Fund, which is an energy and data center focused fund where we leverage Bitcoin mining with activities like grid balancing and heat reuse. Yeah, very much focused on the Nordics actually initially, and yeah, happy to be here. Thanks.
Great, thanks. Lex.
Hi, everybody. My name is Lex. I love the high level of energy and enthusiasm in this room. It's really quite infectious. Thank you. It's not going to work for me. I'm leaving. Okay, so I'm founder of a fund called Generative Ventures. We invest in robot money. That's the marketing theme. The longer version of robot money is, well, how many of you use ChatGPT? How many of you found something useful about it? Great. How many of you think the robots are going to take over the world and melt us down into goo and make factories from our bones? You know, anyway. So as they do this, there's probably some distance between the apocalypse and where we are today. More and more economic activity is coming from AI. But the AI on its own doesn't exist. It's a tool of human beings. But more and more of us is automated. More and more of the things out there doing economic activity look like robots or combinations between software, hardware, robots, and people. And for that, you need financial infrastructure that is different than what you have in the past. So, for example, carrier pigeon or fax or mail or, I don't know, payment cards are all things that are not suited for purpose in a machine economy. And so we're focused on what does the future of financial services look like when the whole thing is really run by robots.
Thank you. Hello, everyone. I'm Selin Suntay. I'm venture manager at BPI France. BPI France is the French sovereign fund. It's a fund that holds today 60 billion asset under management. So we do a lot of stuff. We have a lot of verticals. In AI specifically, we backed Mistral AI, which I guess you guys know. my role within BPI France is to look at the blockchain and crypto vertical specifically among 3 different products we offer. The first one is a financing type of product where we give subsidies or convertible loans or warranty of commercial loans. The second part is the direct investment part. We invest in crypto firms, whether with equity or token. The token is actually something new that we launched last year. We launched a fund of 25 million, so it's a small pocket for what we have. But the idea is here to test the waters and see how companies like ours, how banks like ours can actually invest in token, and play with it in a way. And then the third part, we invest directly in VCs that specialize into crypto. So different type of thesis that we see here, but we are on that respect I would say that on over 200 million exposition that we have today, most of it is today concentrated on the equity and on the direct and indirect equity part of side. And I think that's it.
Great, thank you very much. This whole discussion of Web3 and infrastructure, like we're at a digital asset forum. That's capital inflow, so that means you need to have exchange, you need to buy it, someone need to hold it, and need to be compliant. But I think it was quite interesting, Lex, you said robot money. So what is kind of the next step now the capital is coming in? How is the infrastructure gonna evolve? Meaning if robots is gonna trade, are they gonna do it on their own exchange? Like, what's your thoughts on the next step in the infrastructure to support the more long-term usage of Web3?
It's a very kind question to my absurd framing. I think it's really important to kind of have a North Star for where things are going and to have at least an opinion and kind of a vision for where things are going. I got into the industry not into this industry, but into fintech around 2009 in New York when I founded a robo-advisor. And we were like, we're gonna automate all these financial advisors, and that's gonna be really bad for them and really good for the consumer. And then, of course, neobanks who are like, we're gonna automate all these bank branches and that's gonna be really good for the consumer. And then you have neo-brokers and so on and so forth. So first there was a wave of, call it Web2 fintech, where the distribution of financial products went from being through human beings into websites and mobile phones and apps, and then into APIs, so Stripe and so on, embedded finance. So a lot of fintech has been about changing the distribution of existing financial services. And then you've got the crypto side of things. And so the crypto side of things has been, since Bitcoin, but much more so since Ethereum, the manufacturing of financial products became automated. So before you needed to have a person that you put through like MIT and make them wear a suit for a while and pretend that they're important, and then they can write some papers and do some quant trading and lose money. Now you don't need human quant traders to lose money. You can just do it with a robot. So the manufacturing of financial products, from payments to lending to investing to insurance, all these things you can get into smart contracts. Therefore, we have the collapse of all these asset classes, like fixed income, yield stable coins, or equity-ish risk in the tokens, or various structured products inside of vaults. All this stuff is, and payments, all this stuff is just on chain, right? In the past, if anybody here run like a core banking platform like Fiserv, like the people who are in the banking world were not the people who would do the payments. So we've had the fintech transformation of distribution, and now we've had the crypto transformation or DeFi transformation of manufacturing. And finally, in 2026, maybe 5 years too late, most of the traditional financial services industry is like understanding this manufacturing transformation. As a venture investor, that's sort of like, okay, well, most of it is now execution, right? Like the freshness of ideas at these frontiers has been saturated. So as a result of that, we have to find new stuff. And I think the new stuff is looking at the other places where like the human experience is getting uploaded or digitized, right? And so we're no longer about like the narrow stuff that's happening in the financial industry. How can we do the things that we did but better because blah, blah, blah. Like that's fine, but it's very incremental. I think the big thing that's happening is this economic transformation of who gets to do work and how. And so as a result of that, we're seeing companies that are doing payments infrastructure for AI agents that is native to blockchains or using the X402 protocol or something like that. We're seeing native blockchain capital markets plays around, again, AI launch, either of agents or of assets that are attached to agents. We're seeing decentralized GPU networks, and invested in a couple of those, that provide compute at a large scale level as a network. We're seeing identity layer 1 networks focused on DeepIn, so on machines and sensors, 5 million sensors inside of a company called Peak, which is now working with robotics. You can attach a Unitree robot to it and attach that to a Claudebot. So I think this stuff is still very science fiction, but if you want to go further, you have to go out on the frontier, and that's where we're focused.
So to simplify it, the infrastructure for AI agent as a...
I think if you were to
right?
simplify it, it'd just be robot money.
Yeah, there we go. But I like of course, as a Scandinavian person, the North Star. Selin, what would be your North Star when you're looking towards investment thesis coming up in the infrastructure?
I think that for us, little bit bias on the infrastructure, given the fact that most talent we have in this industry comes from the best schools in tech that we can have. I think that honestly, this is one of the things France can be proud of is really the talent aspect, and honestly, it's good. But where, and I want to jump on this actually, the first use case on fintech, and I started a bit like you. I started with fintech and I narrowed down into crypto within what I was focusing on. And what I noticed is that with cloud-based fintech, most solution we were seeing started with payment and then dived into other products to become maybe a neobank. Here with crypto, we saw another product that started its trading, and it's a bit a different kind of penetration of market, I feel. This is why we saw a difference. But we saw also the skepticism of people on crypto. As soon as we were talking about blockchain, people were saying, oh, okay, this is crypto. No, look at the technology. Look at what the technology can enable as a use case. And I think this is where we started to have interesting discussion about, okay, actually, with cloud-based solution, we could make user experience better. That's true. But here with blockchain, we can enable more liquidity. We can enable more use case where ownership can be more fragmented and therefore give more access to tools. So I think the use case that have been enabled with time are different with the technology that has been used so far within the financial services. But it's not really about, I feel, whether it's payment, trading, or the type of financial product, but more about what the technology in its nature can enable. A use case that we've seen, for example, that I've seen not with BPI, but in the past with Singapore, but already in 2019, they had a supply chain financing product. And the idea was for them to split the financing through their supply chain, because during COVID, the end of the supply chain was disrupted. So the idea was, okay, let's just integrate a blockchain infrastructure into this product so that we can track those suppliers. And basically they did, and they could, because in China, they were lucky enough to have this kind of rule that enabled the transfer of a debt without passing in front of a judge. Here in Europe, we can't do that, for example. So those kind of use cases are interesting and can be discovered depending on the market we are in and depending on the solution. So for me, where I look at how we direct investment today, and because we are European and also very much regulated, obviously infrastructure, it's a bit a no-brainer, but we also have to be cautious in that. We know infrastructure is a no-brainer as a vertical, but we also know that a lot of people are today implementing also, we were talking about payment rails and stablecoin, implementing stablecoin just for the sake of it without enabling DeFi cases later is a bit a new overlayer on infrastructure, and then we come back to the beginning of fintech when people were using WebEx and adding layer of infra for cross-border payments, which doesn't make too much sense.
Yeah, but so much of this stuff is just a ghost town, right? So at Consensus, we did all these supply chain things and all these private chains and enterprise chains and infrastructure, this and that, and like nobody's using it, and the cost is too high, and I think we're now paying the price for being so obsessed with, building these kind of empty staircases and hoping that clients would just show up.
I agree completely. I think, but what we still see is that banks or institutions are still reluctant to go for public blockchain, for example. This is why you see Canton having so much interest from institutions today. It's because they're like, okay, this is permissioned, we're going to be a validator, we're going to have a look at, and we see with institutions, it's step by step. It's first we adopt that, we familiarize with that, and then we can enable. So when you have been in this industry for more than 10 years, you get sometimes a bit impatient, like, okay, we are there, but it's still indeed,
yeah, I mean, we had Quorum, right? Like Consensus managed Quorum for JPM for like years and years and years, and one day.
Do you guys mean everybody's not using VeChain for logistics? Is that?
But let's, I get the principle.
It's a niche joke.
As a VC, but now you're talking about supply chain. Maersk have implemented 30% supply chain in the e-bill of lading. So there are use cases out there. So I think it would be interesting to hear something like extremely concrete as you're doing. So there's the prediction of, and that is the role of a VC, right? But from an infrastructure use case right now, like you're doing it, right?
Well, we're building physical infrastructure for sure, data centers, and we're participating in running the Bitcoin network. But maybe more on this very topic. Obviously, we're seeing a lot of capital flows. Like, where's everything going? It's going into the stablecoin environment and so on and so on. And you did mention being in Europe and being under the regulatory framework we live under. I think what we're definitely about to see in terms of and need in terms of capital flows in infrastructure is compliant infrastructure. We have a lot of progress now in you have the Genius Act, you have the MICA Act. These things are supposed to enable or create a clearer playing ground for those of us building something in this space. But as someone who's been part of founding and running a hedge fund for the last few years, it does get quite annoying, the amount of things that we cannot do simply because of compliance. There are a lot of things that we cannot touch. We can basically not do anything on chain because of the regulatory framework that we are under, at least. We are regulated in Iceland. But yeah, and I think in terms of a North Star, Lex touched very well on it. I love the concept of robot money. The world is changing very, very rapidly. We are seeing the advent of technologies we weren't really dreaming about maybe 5 to 10 years ago. In our case, as I mentioned earlier, we're very much on the physical side of this. We are building data centers. We are helping become the big use case that we have in terms of Bitcoin, for example, is we can be a part of critical infrastructure. So we can help balance the energy grids that have become massively inefficient due to the amount of renewable energy that's been put online. So we've actually come to the point, and it's actually quite nice to see that we've come to the point of the narrative around digital assets and blockchains has changed enough so that the necessary counterparts in the regulatory framework, in the public offices that we need to talk to, we no longer need to start our conversations by convincing everyone that this is not a scam, it's not a pyramid scheme, and so on and so on. And I think the progress of the last 2 years in terms of, we've been getting the ETFs and the institutionalization of digital assets has brought us to that point at least.
I mean, let's try to make it concrete. Like, what would be the next 2 or 3 investment that you guys would do? Just to like simplifying it. I know robot money becomes a little bit abstract in some kind of context, and you have to predict the future as a VC. But can you share the last couple of investments you have done? Just like, let's try to make like some concrete. What would you do right now? Like, what will you invest the next 6 months?
Since we just launched our new token fund, there have been obviously some look at the trends and what we do. I would tend to agree with Lex on the frontier tech. We are definitely looking at companies that are enabled to combine tech, deep tech in general. And we are mostly focusing on services that are infra. It's not that we don't look at the rest, but it's true that there is this kind of still, I don't want to say convincing kind of pitch, but still, we still have to prove that it works. And I think that we are our first customer as well for this as a bank. It's to show the teams as well that it's not a scam and it's something that is working. So definitely this is also going into consideration when we look at it. But yeah, I would say mostly it's that infrastructure, frontier. The thing that, for example, we have completely excluded from our token fund, but I think I won't surprise anyone here, it's NFTs. I think topic like that, we don't look, of course. And yeah, I wouldn't say that we don't look at B2C. Obviously, we will. But what we see so far is mostly B2B offering at the moment, from what we receive.
And it's more maybe like, let's say, the mistake that we did as industry. We invested in a lot of companies who, a lot of freemium users, but not real any revenue. Like, could you maybe elaborate on what infrastructure could you see that could be a business model in actually earning money? You can see there's actually now stable coins, there's liquidity pool, there's actually have a revenue model, right? Like, so I think, is that what you're looking more into? Company actually building something where you can see they're gonna earn money in the short term to prove the business model? Is that the trend that I'm hearing you saying a little bit when you say B2C? Or is it still, we need to build the infrastructure, and then with the infrastructure there, then the solution will come?
It's mostly, for example, to give you an idea, I don't think that banks are ready to actually execute on trade, for example. So they still need to be, excuse me for the expression, but babysitted by providers. And this might not be the case in 5 years, but today there is a momentum for that because banks do not, or institutions do not have the capacity inside yet, and not everywhere in the world, of course, but they don't have this capacity yet. I think the one bank that I've talked to recently that is very performing on that, it's DBS Bank, but they've always outperformed on anything anyway. But except them, they have to, in the end, go to a provider in order to execute trade. So it means that solution that offers, I don't know, institutional trading as a service, kind of, this kind of thing are very useful at the moment. But again, in 5 years from now, hoping that for the industry, they will be able to treat that internally.
I'll give you a bunch of examples.
Love it.
So we kind of go for, our buckets are protocols, financial applications, and then the science fiction stuff, which is the machine economy stuff I talked about. So if we, for example, talk about the financial applications, it becomes very simple. So we invested in a payment orchestrator called WallahPay. Okay, you might know Bridge that got acquired by Stripe. There's a bunch of companies doing this from different geographical segments. And so for those of you that know embedded finance in fintech, embedding stablecoins roughly is happening through payment orchestrators. So WallahPay is underneath a whole bunch of B2C companies in Africa, Asia, Latin America, and Europe that moves money denominated in dollars but is stablecoin powered. And so they've got 20, 30 different branded sort of local shops that they power. Treasury management, dashboard, and a bunch of stuff. Okay. If we kind of go upstream from that to something a bit more weird, I think once you have stablecoin orchestration, you should have DeFi orchestration. So we invested in a company called Glider. Glider is a API-first portfolio management tool where you can set up asset allocation portfolios. And you can say, I have $20 to invest, and I want the $20 split between these 5 different assets, and I want to hold this asset allocation, and then anytime I put money in, it auto rebalances into this. And it can be any asset. It can be Bitcoin and Solana. It can be an ETH stablecoin money market fund type thing, and some equity real world asset thing. It doesn't matter. You need asset management systems on top that are fit for purpose to be real time and do it. And God bless, it touches nothing in a traditional financial institution, because all of those technologies are generally rotting poison that couldn't go away fast enough. No offense to anybody. This comes from somebody who spent years integrating into them. So that's kind of next gen portfolio management. Is that trading going to happen because some agent's going to be, I'm going to query this pie chart thing and have it create pie charts and generate it on my behalf and manage my wallets? Or is it because it's going to be, you've got a liquid fund and you want an asset allocation that self-rebalances without you having to pay a trader? Whatever, it doesn't matter, it's the same thing. One step up in terms of robot money is a company called Nevermind. They are focused on payment orchestration for AI agents specifically, which has been a big theme for Coinbase, Stripe, and others. These guys are integrating the protocols that are appearing. So there's the X402 protocol on Base, then there's the, on Ethereum, there's the, I think 8004, something like that, which is like agent identity stuff. So agents get identity, wallets, ways to pay each other, and so on, AI agents. And so this is sort of like a meta aggregator of the tooling for AI agents to natively use chains, including billing and so on. That's one level up. One level up from that is a decentralized GPU network. So you and I might own a bunch of data centers. You're like, I'm gonna borrow $100 million and build out a data center and stuff it of really expensive NVIDIA GPUs. And then it's like, I have only 40% utilization because I don't know how to sell things, and also, like memory issues. I don't know how to run this stuff, and so I'm in trouble because I raised all this debt, and now I have an idle data center. So this company creates an orchestration layer that unifies all these data centers into a single platform, can compete with AWS, Silicon Valley entrepreneurs, but it's, it's distributed. I'll give you the last one because I know you want to cut me off. This company is called Netho Labs, and they insert a Neuralink-like device. They basically insert a nail into a mouse head, and then the sensor measures brainwaves, and then they put the mouse into a mouse prison, and they watch the mouse with cameras. And so they get the data from the brainwaves of the mouse, and they get the data from what the cameras give them, and then they can correlate brainwave data to locomotion data and sell that to robot companies that need to teach robots how to move around, right? So when we talk about this abstraction of where we're all going, there's a broad range of adventures that you can go on.
Thank you very much for sharing. I was a little bit optimistic on time. We unfortunately only got a minute left, so we won't be able to take any questions, but feel free to. We got more time? Okay, great. I will hand it over to you. If you weren't investing in what you're doing right now, what would be some very concrete short-term investment you would do?
A very concrete short-term investment. Yeah. I mean, a very concrete short-term investment. Wow, that's a great question. I mean, all our focus is on physical infrastructure at the moment. Lex just mentioned, there are definitely some very interesting projects out there that are tokenizing compute, and I think that's going to be a very much growing market over the next, let's say, 5 years. There's a lot of smaller to mid-sized companies that are not yet buying compute that they will need in the future. I mean, the whole AI boom is dominated by hyperscalers and the massive LLMs and so on. There's a whole market that's going to follow. That is smaller, medium-sized companies that need AI, that need compute. They need it for shorter periods of time. They need it, and they will buy that in cloud services or as tokenized compute. So I think that's definitely a very interesting area to look into on a shorter time frame, because there's massive potential for growth in that.
Does anyone have anything they wanted to add? Ask a question to the panel so we can make it concrete? Or should I call someone out?
The price will go up eventually. It's okay.
No, but I think like if at least for what we are seeing, right? Like I think it's the combination now the infrastructure for capital inflow. Let's call it that structured product. Like money can now flow into the industry. And I think like what we at least been pondering about, and when we do our surveys, is what is the real usage for average citizen, consumer, and company? And I think maybe to round it up, it would be interesting to, could you give some simplified usage of when you do your investment, like what are they really solving from an infrastructure point of view? Like, is it the digital identity? At least in Europe, you've got the digital identity, digital product passport, digital wallet coming out. So are you seeing anything from a more consumer business simplified way that this is going to happen this year and this is where you would look in to invest as well? Or is it still like hardcore infrastructure? So real usage from an infrastructure perspective for citizens and companies.
So
not robots.
So it's true that infrastructure it's a large focus, but one of our key last investment is in Morpho. So I mean, Morpho is heavily B2C. We have invested in them in token before launching the fund, and this started as a strategy. Actually, it was our testing the waters for us. And those kind of solution works perfectly well for us. I think that being a regulated entity is always a constraint in the sense that we always have to look at, okay, if a business is B2C, we have to look at risk that can go further than B2B. And with Morpho, it wasn't any question. It was an easy path. And again, it's, I think, one successful investment. So yeah, B2C.
Last 30 seconds, round up, comment.
I think it's funny you actually mentioned products for humans, not robots, but the humans are becoming robots. Like the robots are going to do all the work for us, you know? Yeah, I think, no, I don't think.
I don't think anything worth doing is simple. It's a really complicated world, and you should take the time to, now's the time to dig in. Because it's going to be hard for a while. But I think, you know, you can be, I hate it so much, okay? I hate it all. I'm so glad this is being recorded. I hate this market. You know, the market structure is all messed up. Like, there's so many things wrong. And it can be very frustrating. But when you do zoom out, you know, it is super obvious that technology is cumulative, that it only gets better with time, that clearly better solutions win once you implement them and play them out on a longer time period. And so I think for people who are into this industry and who are curious and have the patience to learn, you do have an advantage right now as everybody's panicking to commit and think more deeply and with more patience than others.
Last comment? I think that's it. Thank you very much for listening in and staying. Please feel free to reach out to the panelists if you have further questions. Thank you.